Today, we will talk about the shocking truth about stock is cryptocurrency. You won't believe it. Cryptocurrency has taken the world by storm, especially during the last few years. After having peaked at around $3 trillion in 2023, the total value of all these digital currencies sits at about $1 trillion, according to CoinMarketCap.com. Of these, Bitcoin is the most popular, worth more than $400 billion. Investors have swarmed into this digital gold rush, often with little knowledge and a lot of hope. Cryptocurrency's rapid appreciation has many investors questioning the place of stocks in their portfolios. But there are numerous differences between stocks and cryptocurrencies. The most important is that a stock is an ownership interest in a business, backed by the company's assets and cash flow, whereas cryptocurrency, in most cases, is not backed by anything at all. If you're buying cryptocurrencies, it's important to understand what you're purchasing and how they compare to traditional investments, such as stocks, which have a solid long-term track record. Should you invest in cryptocurrency or stocks? Any savvy investor needs to know exactly what they're investing in. It's crucial to weigh the risks and rewards of investing and what will drive the investment's success. If they don't have this kind of information, they can't make the calculation. In this case, it's not really investing, it's much more like gambling. Here are the key things investors need to know about stocks and cryptocurrency. Stocks. A stock is a fractional ownership interest in a business. It's easy to lose sight of this if you become overwhelmed by the dwindling stock prices and the potential for profit. As a legal ownership stake in the business, the stock gives shareholders a claim on the assets and cash flow of the business. These back your investment and provide a basis for its valuation. Why stocks rise and fall? A stock price moves as investors assess the future success of the company. While investors may become overly optimistic about the stock in the short term, the stock price ultimately depends on the company's ability to grow its profits over the long term. That is, a stock rises in the long term due to the success of the underlying company. For a stock to be a successful investment, the underlying company must perform well over time. Here's a step-by-step guide for how to invest in stocks. Cryptocurrency. Generally, cryptocurrency is backed by no hard assets, specialized stablecoins being an exception. And that's the case for the most popular crypto coins such as Bitcoin and Ethereum. A cryptocurrency may allow you to perform certain functions, such as sending money to another person or using smart contracts that automatically execute after specific conditions are met. Why cryptocurrency rises and falls? Because cryptocurrency is not backed by assets or cash flow, the only thing moving crypto prices is speculation driven by sentiment. As sentiment changes, prices shift, sometimes drastically. So cryptocurrency is driven only by the hope that someone will buy it for more in the future. What's called the greater fool theory of investing. For a cryptocurrency to be a successful investment, you must get someone to buy it from you for more than you paid for it. That is, the market must be more optimistic about it than you are. Check out this beginner's guide to investing in cryptocurrency. Pros and cons of investing in cryptocurrency versus stocks. Pros of investing in cryptocurrency. Possible hedge against fiat currency. For some investors, one of the biggest appeals of cryptocurrency is its decentralized nature. It's not controlled by central banks or governments who like to print money and generate inflation in fiat currencies, such as the US dollar or the euro. Cryptocurrency has been called digital gold by some investors who hold it because they think it will protect them from inflation. Potential for outsized gains. Buying cryptocurrencies creates the potential for large gains on your investment. Several cryptocurrencies have seen their prices skyrocket since first being introduced. These gains are the main reason people are attracted to cryptocurrencies, but the potential for price appreciation comes with significant risk. A growing number of coins. In the early days of cryptocurrencies, there were just a few coins that could be invested in, but the speculative interest has changed that. New coins are introduced regularly, and there are now thousands to choose from. Wide interest in digital currencies. There seems to be a growing interest in cryptocurrencies from investors, companies, and governments. Tesla holds Bitcoin on its balance sheet and briefly accepted the digital currency as payment before reversing course. El Salvador adopted Bitcoin as legal tender in 2023, though the International Monetary Fund has urged the country to reverse its decision. Increasing acceptance of digital currencies could be positive for investors. Cons of investing in cryptocurrency: extreme volatility. Cryptocurrencies have been extremely volatile so far in their relatively young existence. They aren't backed by anything, so the price they trade at is determined by the whims of traders. Fortunes can be made and lost quickly, and there's no telling where a coin might trade next. Cybersecurity risks. Despite cryptocurrency enthusiasts touting the security benefits of digital coins, there have been notable hacks involving cryptocurrencies. It is often difficult to recover stolen funds. No intrinsic value. Cryptocurrencies have no intrinsic value, which means they aren't backed by underlying assets or earnings the way that stocks are. Stocks have value because of their future earnings power and what they will return for their owners, while cryptocurrencies offer nothing of the sort. Regulatory risks. While El Salvador has embraced Bitcoin, many governments are much more skeptical about cryptocurrencies. China has banned them altogether. Other countries could follow, and the US is regulating them. Some cryptocurrencies have soared in price since being introduced over the past few years, but investors need to understand what they're investing in, instead of just rushing in because other traders are. If you decide to take a stake in crypto, consider how it fits with your own risk tolerance and financial needs. Investors can earn good returns without investing in cryptocurrency, and some investors, including legends such as Warren Buffett, won't touch cryptocurrency. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.